Kia ora, first home buyers. This video is just for you. I have been a first home buyer once and know how emotional and scary the process can be. But a lot of Kiwis feel like they will never be able to afford their own house. Over the past couple of years, housing affordability has severely declined in New Zealand, and with cost of living so high, it might feel impossible for many to save enough for deposit to get onto that property ladder. But the government housing agency Kiwisaver offers several products and resources that can give you a helping hand toward home ownership. In this video, I will go over 4 of the available options for first home buyers. I will discuss first home grant, first home loan, first home partner, and Kiwisaver. The first option I want to discuss is the first home grant. This is such a great option because it really is free money from the government toward your deposit. Depending on how long you have been contributing to Kiwisaver, you may be eligible for a first home grant of up to $10,000 for a new home or a maximum of $5,000 for an existing home. And what some might not know is that this is per person. So if you would buy as a couple, you may be eligible for a maximum of $20,000 if you're buying a new home. That's $20,000 towards your deposit that you won't have to put on a mortgage. So what is this first home grant? The first home grant is a government initiative aimed at assisting first-time home buyers with lower incomes to purchase more affordable houses. Now this can be frustrating because it seems at first like a grant that's for all first home buyers, but it's really meant to help those who wouldn't have otherwise got into a house. So the criteria is quite strict around income and the price that you can pay for your house. As an example, the maximum you can pay for an existing house in Tauranga at the time of this recording is $800,000 and $875,000 for a new build house. Also, if you're one person buying a house, the maximum you can earn is $95,000 and the maximum you can earn as a couple is $150,000. How much you can get for this grant is tied to how long you've been contributing to your Kiwisaver. If you've been contributing to Kiwisaver for more than 3 years, they will give you $1,000 per year that you've been contributing. So in other words, the minimum you're going to get if you meet the first-time grant criteria is $3,000. It keeps going up until you reach 5 years or more. At that stage, the maximum you can get is $5,000 per person, except if you're buying a new build house, in which case it doubles, and at that point you receive between $6,000 and $10,000 per person toward your deposit. One thing to just bear in mind is that the bank requires you to have at least 5% genuine savings as a deposit. The second option I will be talking about is the first home loan. Finding the deposit for your first home can be a struggle, with most lenders requiring a minimum of 20% deposit. But with a first home loan, you only need a 5% deposit. First home loans are issued by selected banks and other lenders and underwritten by Kiwisaver. This allows the lender to provide loans that would otherwise sit outside their lending standards. This might be a good option to look at if you have not as much deposit saved, but still a reasonable income to service your mortgage of a 95% loan. But there's still quite a few hoops to jump through before a lender will lend you the money. And I will post a link in the description where you can check if you meet the eligibility criteria. The third option is the first home partner scheme. This scheme can help bridge the gap if your deposit and home loan aren't quite enough to buy a house. Shared ownership means that you initially share ownership of the home with a third party who purchased the home with you. In this case, Kiwisaver. You are the majority homeowner and occupier, but Kiwisaver will own a share in the home that you will buy out over time. For example, you might have saved 10% of the purchase price of a home and a bank is willing to lend you 75%. Kiwisaver then contributes 15% to purchase the home with you in return for a 50% share of ownership in the home. However, Kiwisaver will allow you to purchase their 15% share back over the next 15 to 25 years. It's important to highlight here that as the price of your home appreciates, so too does Kiwisaver or does share that you need to pay off. However, as you won't be paying interest on the amount that they have financed you, you will be saving an interest cost as you haven't had to get a bank loan for the extra 15% of the loan. To be eligible for the scheme, you need to have at least a 5% deposit, you need to live in the house for at least 3 years, and you'll need to sign up at their website, and I'll include a link to that in the description with further details around eligibility. The last option I want to talk about is the Kiwisaver First Home Withdrawal. If you have been a member of Kiwisaver for at least 3 years, you may be able to make a withdrawal from your savings to put towards buying your first home. Eligible members can withdraw their Kiwisaver savings. However, at least $1,000 must remain in their Kiwisaver account. To be able to use the Kiwisaver withdrawal, you must intend to live in the property, so it can't be used for an investment property. If you're a first home buyer, you will need to contact the Kiwisaver provider directly to apply. There are a few other options available as well, like KiwiBuild or Kiwisaver, and I will put a link in the description for more information on that as well. I hope this video helped to get a little bit of an overview of the support that's available for first home buyer. But I definitely recommend talking to a good mortgage advisor to find the option that's best suited to you and your lifestyle. If you need a recommendation for a mortgage advisor, get in touch. And once you have your finances sorted and you can start the fun part, house shopping, feel free to give me a call if you have any questions at all about the buying process. Good luck to you and all the best. Bye.